All right, what's going on, guys? So we're doing a quick little scan here in the Discord call. I'm going to be going over the market and what I've seen as of lately, what I've been picking up on, and then we're going to basically just take a quick little breather, a quick little reset, and start really wondering what we're doing here in the market. So first of all, we had our FOMC today. Powell hasn't even spoke to Trump about any of these decisions being made, right? So that's all obviously to be determined. I don't think that this FOMC is actually going to be as pivotal as the what we all actually thought was going to happen. And I think we're just in a range of major consolidation and a lot of rest on the indexes, right? And with a lot of rest, always as a rule within financial markets, a lot of rest comes a big time expansion at some point, right? But we might just maybe need a catalyst. As of right now, the whole entire range is dominant from a distribution perspective. However, we do have a big time amount of earnings tomorrow that are very impactful for obviously the indexes and their charts, right? So we had our FOMC today. I want to talk about that one real quick. We had a big time NWOG with that whole entire huge NVIDIA gap down. As you can see over here, we had a major gap down throughout the week here on NVIDIA, right? And then that led to a big time loss of all of this daily support that has been established since all the way back here in October, right? So that was a very critical level that we actually lost. And then we also actually got a nice little rejection off of that point in after hours, and now we're actually red in after hours after being somewhat green. So with that being said, we'll have to see how the market actually opens up around this area tomorrow. One thing that I will have to say, guys, is that I do really think that this weekly print is going to be very critical and very important for the directionality of the market because NVIDIA is a liquid leader within the Mag 7 names. And this could result in either a major trap candle, which leads to a squeeze higher, if we were to put in some sort of hammer bar that was above this weekly support, and then we start getting these mitigation retests where that would lead to obviously deleveraging from the short side, and we would probably get a little bit of reversion all the way back up throughout the NWOG, which is this massive gap imbalance that we have on the chart. As you guys know, and as you guys learned from me, you would understand how major gaps left behind and trying to trade shallow structure beneath a gap is never going to be a great trade, right? We have a really, really nice long side focus here on a lot of these other names that are kind of seeing that dispersion happening from obviously these tech charts that are leading into obviously attention into some of these other names, right? We have one with Nike. This is a fantastic chart that I'll obviously be looking for more ads on. We actually just broke right through the Q2, that would be the Q2 earnings gap, the opening print of that earnings candle, which is technically the gap. We actually closed right beneath that level today. So I want to see how we properly digest this previous range on Nike. But the reasoning as to why I love these charts is because they're showing clear relative strength to the rest of the market ever since we swept this low. Second to that, we also do have a major consolidation range where I believe everything was obviously absorbed from this consolidation range. And when you're looking at this from a volume profile perspective, we had a lot of low volume trading action that was happening throughout this overall range, right? So the fact that this thing actually sold off was essentially just a lot of manipulation into the new low being the same sequence of buyers that were here previously to the 3 lower low accumulation that happened after this crazy markdown, right? And this was our leg of showing us that this was in a preliminary accumulation. Now we did leave behind a gap all the way up into 94, as well as another gap all the way here at 85 with, like I said, shallow lower highs beneath that and no true test into the imbalance of that chart, right? So with that being said, there's going to be a lot of vulnerable upside targets that really maximize risk to reward. That's the most important factor that we have here within swing trading. And I would really like to see this one properly digest and eventually get above this previous lower high consolidation range, which was technically around the election. I'm not the election. I keep saying election gap because we're talking about the indexes so much, but right over here, guys, was the major news. That was the Bill Ackman stake that was announced for Nike, in which Bill Ackman was accumulating a stake in Nike. That's another thing that I like about this one. But we made a new low, that new low being an accumulation beneath the previous swing low, right? And then we started to see a lot of relative strength, as well as just relative strength amongst the whole entire discretionary sector, especially within the basket that kind of correlates with one another in the discretionary sector. Obviously, within the discretionary sector, you have names like Tesla, you have names like Home Depot and Lowe's. Those obviously don't really tie in super nicely into Nike. In my opinion, it's more of a McDonald's, Nike, Starbucks, Lulu type of algorithm going on here. So this is a fantastic looking trade. I really do like the fact that we're pulling up into this range, and we actually held up relatively well throughout the part of FOMC selling off a little bit. We had a absolutely insanely strong tape as of today, right? So I'm just going to be monitoring this one and seeing if I could get a re-entry on these. I still own the March calls, and that's why I wanted to bring this one up. Now we'll get into some of these other names and a few that are actually really interesting me. We have one right over here. This is LRCX, and this one was actually really primed up and ready to go. However, NVIDIA obviously ruined this one with the whole DeepSeek thing going on. Basically, everything that has to relate to NVIDIA was taking a really, really, really big impact into some of the other semiconductor names. Those being like MU. We have a big time gap here that was just filled within MU. We also have this huge, huge, huge earnings area low as far as this massive gap that extends from 103 all the way down into 90. So I would like to see some structural consolidation and some proper digestion within this report on LRCX to be able to take a stab at this one. The reasoning as to why I really love this chart is one, because we had a 1, 2, and a 3 lower low accumulation where progress was really not being established from sellers ever since our first low of accumulation all the way to our third low. It was only a 4.35% drawdown within 105 days, and you could visually see that just through the chart, right? We would call that a 3 lower low sell climax, right? And then subsequently, once you're able to identify how that is technically a shakeout right here on this candle, which is technically a breakdown failure because we closed the candle beneath this weekly support, and then there was a big time failure to obviously retest and displace, and then obviously break down, base that level, and then sellers hold it and push it down further. Instead, what we did was we got a terminal shakeout followed by a rip back higher. We built up a lot of internal base liquidity here off of this 79.60 range, and then we actually tried to break through and target back to the upside externals, as well as this gap fill in the daily chart, as you could see all the way over here, and this thing looked really good for the time being. However, NVIDIA started to really sell and really show off its distribution, which took a big impact on a lot of these other semiconductor names like MU, like LRCX, and all the other ones, right? So with that being said, obviously semis are in a very, very rough time right now, so things got to be taken very, very lightly. However, I want to see a lot of consolidation down here into next week, especially if I'm going to be trading a leg up on some of these other names that can show off a little bit of strength, but they just need a little bit of time to digest how aggressively they were sold off, right? Just as I talk about with huge bull pegs to the upside on something like Disney, where we had a really nice long side trade, I'll talk about for the same moves to the downside, right? Whenever you're trying to see a change of hands and you get a quick sharp knife down and you get price action that looks something like this with no bidder off of anywhere just yet. You have to really wait for levels to be reclaimed, for some consolidation to happen, for us to be able to take a really nice clean entry on a higher time frame level to risk off of. So with MU and LRCX, what we have is we have this massive gap we're dealing with here. LRCX just being a markup here on the earnings report. However, what we're doing now is we just actually retested the top of the gap and we sold off a little bit from that. What I would like to see would either be a lot of consolidation down here, right, which then leads to a leg higher, and then we start getting a true SOS on top of this internal liquidity range here, and then that would lead me to believe that we are now targeting these upper extremes or these external resistances that are reaching all the way up into 86.32, and even a little bit higher up into this gap fill. So that could be a really, really, really good swing trade for the future. However, it's just going to need a little bit of time to digest. So I do have LRCX on the radar for me, and a lot of these charts could really also shape up very well in a very quick way, just because of news, just because of INTC earnings, just because of some of these other earnings reports that can really, really bring a positive impact on price to get those things above those levels. So with that being said, that would be our chart on LRCX and MU. So now we'll go into some of these other sectors. First of all and foremost, I would like to just really talk about the NVIDIA chart real quick. I want to short this one again. It's just going to need a redistribution and probably like a 3 higher high redistribution somewhere within the NWOG territory. If we do get back above this level, I might take this a little bit long. Just for reversion a little bit higher into the gap itself. I'm obviously going to get really tight risk off of a really reliable risk level, probably on a reclaim of all of this daily support because there's so many orders that sit within such a big time gap down. If you guys take a look at the actual new week opening gap, it's technically right here on where we opened at, and the actual imbalance on what happened over the actual weekend before all of the pre-market actually opened was right up here at 135.90, call it 136 flat. So this would be an execution range around 172.20 or 127.72. I read that completely wrong. And we could obviously take this thing all the way back up above 130 and eventually into the mid 130s, mid to low 130s. And that could be a fantastic trade. So I think there's going to be a little bit of reversion with AMD, but like I said, once again, guys, I need to see a lot of confirmation. And if that confirmation doesn't happen for a redistribution and we go start collecting liquidity beneath us that has a major imbalance now for the upside, and then we start developing a change of hands, maybe off of a gap fill, or we start popping down into the August 5th territory and all of this support, then maybe this could be an absolutely insane trade later on to revert all the way back up to the gap, because that is an imbalance at the end of the day. And without that being retested into and maybe a trickle down even more can set up even a better long side trade. I think it's going to be a very, very sharp and quick redistribution where they're getting to, obviously, they're able to unload a little bit more in a quick way off of people really rushing in to buy the dip. We just had a big time statistic that we seen with, what was it? It was NVIDIA retail investors buying the dip with $562 million in total value. And that's just retail, right? So you have to imagine, there's a lot of extra liquidity, I should say, on the table that needs to be taken out within this gap. Meaning just pending orders. You guys hear like liquidity a lot from like other traders, and they talk about like FVGs, which, like, yes, they could be correct in a certain way, but I'm just talking about orders here, guys. I'm talking about actual liquidity, not the imaginary ICT liquidity where people talk about like, oh, there's equal highs up here. Yes, you could be correct, but I'm talking about actual orders on the dark pool. I'm talking about actual orders that makes sense as to where things would obviously gravitate towards before we move lower, right? We talk about QQQ. There's a big time dark pool all the way up towards the top of the gap fill, right? So there's sell orders that price obviously gravitate towards. We have an inside bar today with a lot less volume traded actually than what the gap down was, and that's FOMC, right? So a lot of the big money and its decision making can be really based off of earnings, or there could be just a major change of hands where they have the control of the inventory, right? And whenever they have control of the inventory in the market with a major volume footprint that looks like this on this crazy gap down on January 27th, they'll just simultaneously bid the lows or the gaps. They'll sweep it into the gaps, capture liquidity off of those gaps. As we could see from right over here, we had a big time gap. And then once they capture the liquidity off of that gap, they send it back to the upside, and then they get more liquidity from the upside to unload the remaining orders off of, just through euphoria, just through retail, just through uninformed traders, and then they dump once again, and then they basically just get a nice little like reversion trade back to the upside on accumulating from where the dark pools were placed from the downside, while they simultaneously sell the upside and get more exit liquidity on what their previous position was whenever they were unloading it from up here, right? They're just getting more liquidity whenever they're able to rewash the lows, sell back on the highs, and then sell more in bulk off the highs, right? That's essentially what a path of least resistance is, and that's why it's created. Is just because there's a diminishing amount of demand as you test into these bottom ranges, right, to the point where there's no demand anymore, right? So with that being said, I would like to see a little bit of reversion on AMD. Do I think it's going to happen anytime soon? Not necessarily, right? But I want to see what happens with all of this volume and actually a relatively coiled range. I mean, it is a pretty large range when you're looking at this in terms of like, a 3-day trading pattern here of however much range we've actually covered, 9% on the underlying, which is absolutely ridiculous. So that could obviously take a little bit of time to digest, right? And I think with a crazy move down like this, it could obviously take a lot of time to digest on a redistribution. So don't just short the hole on a retest. That would be what an uninformed trader does, because they're not respecting the fact that things need to obviously be reevaluated, right? There's a lot of fear in the market, I think, right now, and a lot of that fear results in a lower amount of participants. So with that being said, I would like to see a 3 higher high distribution on the 1-hour chart with NVIDIA, right? So obviously if we revert back into the gap, it would look something like this, where you see like, a structural buildup of higher lows and higher highs. However, the higher highs are being sold off on, while the higher lows are starting to lose a lot of their force, meaning a lot of volume, a lot of momentum as we creep up higher into the gap. So that should be a really nice trade down the road. Shouldn't really be anything too hard. You just have to simplify it and have enough patience to be able to wait for that. Healthcare sector. I think that this sector is really attractive. I really do. This is a major underperforming sector. However, I've been talking about this chart like I'm a broken record for the longest time. When we take a look at the J&J chart and we really understand what's going on here, we can really start to see how this support was all just a major weekly support that was undercut, right? This was a big undercut of all of the support that then led to a recovery higher, that recovery higher being through the earnings report itself, right? Now, when we look at the actual earnings report, we could see how that big time undercut was a huge daily base that was established ever since that report happened. Now we're getting crazy momentum and lower volume inside bars that are on top of the overall range, right? I really like how these names are also providing really nice relative strength to the rest of the market. Just the same as with Nike, just the same as with the McDonald's trade that I took this week as well. Another chart that I'm going to be eyeing up for a profit roll is McDonald's once again. If we can remain relatively weak on this leg lower, that obviously reclaims the support. But we go back over into J&J, we go take a look at mRNA, and we can really see how some of these charts could be developing super clean long side trades for the future. Obviously, it's going to take a little bit of time to obviously play out. However, we have a big time earnings gap, or this is not even an earnings gap, I'm sorry. This is just a big time gap down that would likely need to be defended with some sort of buyer stepping in at some area here on mRNA. This is like almost like a bottoming formation that's being formed here on Moderna for just a quick little reversion back to the upside. I'm not even saying that this needs to be an options trade. This could be solely a commons trade with about $2 to $3 of risk per share, and an upside reward of potentially all the way back up to like 60. This is extremely extended from the downside, and essentially where all of the volume is pouring into the chart is actually November 11th and its candle on November 11th, which for the time being this was the all-time low for however many weeks, 49 days essentially, and then we made a new low, and that low is bought up. So I feel like something's really going on here just because we have so much volume around this general area. We do have earnings on February 14th, and maybe I would like to see a run up into the earnings or just some nice consolidation and a really strong daily higher low. Preferably what I would be looking at is current swing low, current swing high. I want to start seeing if these things could pull into the discounted range, and maybe we get a higher low off of that area, or simply just finding momentum above the top of this gap down. Obviously now confirming progress from buyers and using that as a risk level. And then I would obviously have a target in mind of 49 to 50 and eventually all the way up into the 60s or 50s, 57, maybe around here at 52, right? And that would be about 42 down into like 40, 75 of risk. That could be a really nice commons trade. So we go over into like some of these other names. We go into the sectors. These are all the liquid leaders on my sector list, and we can take a look at some of the other ones. We have a fantastic weekly candle here on Starbucks. I know the Kramer comments today. I know everything that's going on with this chart, and this was a beautiful long side trade. It was actually part of my plan to trade this long today. And I was like, you know what? Nah, I was just a little bit lazy this morning. I was like, I could take a flush trade on this one. The implied move for this report, I believe, was 5 point something percent, maybe 6%, maybe 8%. Actually, I think 8%. I'm not too sure. And it was only up 3% in pre-market, but it was at a very critical level. If you guys are looking at this from the weekly chart, it's simply just a big time MOAT trend line, and then what we had was we had a major accumulative base throughout most of summer of 2024, which then led to a really big markup. That markup was the biggest volume that we've actually ever seen within Starbucks, as you guys, never mind, all the way back here in 1999. I really don't give a shit because Starbucks was $3.50 a share. I don't care about that volume. I'm just saying that this volume always provides a directional read. The fact that people were shorting Starbucks it really makes me question the quantity of brain cells you have in there, because that is just the dumbest short I think I've ever seen in my life. No offense to anyone that took this in here, and sometimes I'm a little bit stern because I'm trying to teach, but guys, this type of volume and that record high volume, that is a read for weeks. I've been talking about this for the longest time. Some of my best reads I've ever had have been off of, and just a general rotation have been off of volume like that, right? We go over into Tesla and we could see how, you have crazy volume off of these lows and consecutive gap ups with crazy amounts of volume. You go over into something like Starbucks and people are trying to short this, it's going to lead to a major squeeze out. So we got a beautiful candle there. And essentially what I want to see happen here is how this can properly digest the bear gap, because there is a bear gap here that has a fill all the way up into 114.25. And if this can properly digest that, it's going to 114. right? So what I mean by properly digesting is you don't want to see a breakaway move higher where this thing just continuously grinds its way higher. It completes the accumulation and then it turns into a major change of hands because it's majorly extended for the upside. There's not enough of a willing amount of demand from the upside all the way up into 114, and then a redistribution starts off of the bear gap, right? And then it's a cooked trade. I want to see a high tight flag beneath the gap, something similar to Lulu. We talked about the Lulu schematic, right? We go to Lulu, we talk about this one. I was long all the way down here on Lulu the first time. I should have repurchased this one and risked the low, but this was a fantastic example and almost very similar to Starbucks in terms of bear gaps to the upside. Very accumulative candles that we're currently trading around, right? That are very recent. And very important relative to the rest of the range, right? It's a new candle. It's part of the current auction, not from, all the way over here, and we have major gap imbalances to the upside. So whenever you're thinking about taking a trade from the bottom end of that candle or just a high tight flag off that candle, you have a minimal amount of risk with a major reward to the upside, right? So the convexity here for a long side trade, in my opinion, with a high tight flag, on Starbucks can be a fantastic opportunity to start thinking about taking a long after the contracts cool down, after a lot of that flow gets weeded out of the name, and this one will be a swing trade target all the way up for 114. Fantastic trade there, and if this can pull back low enough, this could be a very good risk reward trade on simply just a revisit of the earnings candle high. So absolutely insane day for Starbucks. Beautiful candle. I don't give a fuck about Kramer's advice. I don't care if he's long, short. I don't care if he makes a threat to the CEO. I don't care if this I don't care about anything. I don't. Chart, price, volume, and it's actually fitting within a sector that's very strong as of right now. We'll go take a look at Macy's real quick. That's one of those names in the discretionary sector. I think that this could be a really nice swing trade back for the upside eventually, all the way up into 19. So up into 19, we have obviously a big time resistance at 18 on the weekly chart. We'll mark that one out here real quick, and then we're going to take a look at also another level of in mind real quick. I'm going to just never mind. Anyway, we have a gap fill all the way up here to 19, right? And then we also have a big time resistance at 18, right? So we have two upside targets in mind that are very, very, very easy to reach. And there's nothing that really, really, really tells me that this is a trade just yet. Now, do I really care about this sell? No, I don't. Where do I care about more on the chart, actually, guys? Where do you think I care more about? Well, guys, I care more about the volume, right? And this technically was a gap down. So we also do have to consider that there was a big time seller within essentially that day of price action, just because we had a gap down. However, there was crazy volume on that gap down. So there was actually a member in here. I can't remember who it was, but we were just talking about this. It was a really nice trade. And then it really hit me like, wow, that was fantastic. So we had a quick little spring over here on more of like a smaller time frame schematic, followed by a ton of consolidation. We finally had our spring test, which led to a rally higher back to fill the bear gap. Now we're pulling lower, and we were pulling lower actually beneath into the earnings candle open, which is right there. And that's actually very relevant. One, because that is the support range. Two, because that's actually the gap. So whenever I talk about like gap progress ranges, this is technically your gap. It's a little bit too big to obviously derive to really develop a trade plan and really put together an execution range off of. But I want to see a little pullback and just see how this one behaves on that pullback. If it is a really, really, really low volume sell on this one, I'm going to be putting price alerts actually right off of this level just so I know to watch it. It's not like I'm going to go all gung-ho and wait for some sort of opportunity, but I really like how this chart is starting to formulate. One other thing that I really like to talk about is this is a major rally for the upside throughout 2023, followed by a ton of much lower volume, less significant volume consolidation that's essentially just all into the golden pocket. If you take swing low, swing high, you look at the character of price, we're well beneath discount, and actually we undercut the 618. And we've just been basing around that golden pocket from 1632 all the way down into 15 psych. So I want to see a pullback and just see around that 15 psych, which also ties in with the actual earnings gap itself, and just see if we could hold that area. And if we can, this could be a fantastic trade for the upside if this is a really low volume sell back into the lower extremes. And we'll take a look at the daily EMAs real quick. They're actually right off of price. If this sees a little bit of momentum, could also be a decent trade, like into the end of the week. And then I could just trade it a little bit later. But a lot of time here is very important, just because like the contracts are really cheap for a reason, because one, it's a $15 stock, and two, the ATR is very low. The IV is very low. It's very fair in terms of premium. I don't know how every single chain stacks up together in terms of matching open interest chain by chain, and in a fairly liquid chain week by week. I don't know if that's the case here with Macy's, and I'll have to check that out. You probably should too. But it's a decent looking chart. It's not anything crazy. It fits the whole under the hood theme that's going on here with the tech dispersion happening into some of these other names that people actually don't really talk about. They're kind of like, do you guys hear a lot of people on Twitter ever talking about Nike? And do people see what's going on with this chart? Like, if you guys know of anyone that talks about this other than our group, I would love to know. Maybe like my buddy Lucid's group, he talks about it, but like other than like me and him, I don't really see people talking about this one. So less crowded trade, fair premium. You really have a big time upside target in mind for a name like Nike, with 85 being, this is my primary chart. That's basically all I'm really trying to say, right? And we also did get the trend break. So everything that revolves around the whole entire Nike thesis is just clean. It's simply just clean. So that's going to be a chart I'm monitoring for the future. It's just there's not a really reliable risk level to play off of right now. Disney, another chart I love and that I've been talking about for a very long time. This chart is just pure. This is just what I call pure. This is poetry in motion happening right here, boys. This is just one of them charts where we have an external high within the accumulation range, meaning that we have targets in terms of liquidity for the upside that are highs, but those highs are beneath the ultimate high, which is the external high. External meaning, outside of the other high. It's swallowing the other high essentially. So with the Disney chart, it's obviously in a very accumulative looking base right off of the COVID low. Do I think that this one has potential for 130 this year? I do. I totally do think this one has a lot of potential for 130 this year. So when you guys look at the gap progress areas on the chart, right, you could see how this major weekly gap was obviously defended through a support, and then it was rejected through resistance. But we never got a true structural retest of where this previous weekly support was actually sitting at. That's why I have a target in mind for Disney all the way up into 129.26. Whenever you're looking at a fairly discounted range in terms of swing high, swing low, and you could start looking at the equilibrium based area on the chart, you could see how that's into the 140s. I don't necessarily know how 140 is going to be, but really all my focus is off of the 126.48 external high within this whole entire accumulation range, right? Now, why is this an accumulation range? Well, simply just look at the volume profile here on the weekly chart. Really healthy spread candle, a lot of volume, really healthy spread. That's a redistribution occurring on a smaller time frame, and then the redistribution obviously fizzles out with lower volume. Obviously, very neutral spread candle, but it was off of a bull gap fill. that's obviously a buyer in hindsight, right? And then obviously we had the same thing going on here with really healthy spread candle and a lot of volume behind that, right? So this is dominant in terms of an accumulation range, right? And we actually had the 3 lower low happening once again, as we can see throughout this area, which then was essentially completed as a campaign once we swept the COVID low, and then we obviously got the reversion back to the upside, followed by redistribution. That redistribution led to another reaccumulation, right? So it's a much, much bigger perspective of just one big accumulation, in my opinion. Companies going nowhere, and we go into the daily chart and we could see how this had a big time peg, right? And this peg actually was a big confluence with other areas on the chart, right? We had a huge gap here. That gap obviously successfully filling and then obviously pushing up into where the preliminary resistance was of the redistribution, which was the major fake breakout in the spring action happening, followed by the redistribution, the LPSY, right off of the earnings report. A huge markdown of almost 10% on the underlying, followed by a reaccumulation, boom, pop back higher, fill the gap, lowering volume after the gap fill. So that leads me to believe that sellers are obviously running out of amount of liquidity and amount of sell orders that are sitting off of this area on the chart. With that being said, I would really like to see how this one holds up around this daily seller ask. With a daily seller ask, what I talk about is typically how you have so many daily candles that are obviously failing to get above a particular range. That being this range right here, right? So we have a huge daily range in terms of like how we have a big time resistance. And I want to see this one getting a little bit of proper digestion around that area. Could this be a dud leading into the earnings report? It totally could, but I have a few really good ideas unless this is a peg that just shoots right up to target at 126.50. If Disney wants to mark down and it marks down and that markdown actually happens into somewhere within this peg, and then we get a really strong intraday recovery on Disney, that could be a fantastic trade for the long side in the future as well. And this report is on February 5th, right? So we're in January 29th. We only have a little bit longer for February 5th. That's why I'm already including this one in the scan and just to have that one on the radar. I do think this one could obviously be some sort of earnings run-up trade, but we were already long on this one, so that's not going to be a name that I have a full focus around just because the risk reward's getting a little bit worse over here. Where I was long was on this candle, and then the follow-through day on this candle right here. I caught somewhere within the midst of this candle. So 110 to 114, 4 deltas on a swing trade. That's far more than enough for Disney, especially in a market that's a little bit risk off in terms of indexes and whatnot, and tech being in a major sketchy area, right? So I get a little sketched out with other charts, I can't lie. But yeah, that's Disney. I think that one's going to 126, and we'll have to wait and see how that one plays out there. XLE. So we're obviously in a tech distribution, right? And we had a big time markdown, I believe, within Microsoft. I believe we had a decent little markdown elsewhere within Tesla. Is Tesla back up? Okay, so Tesla did actually end up reversing back to the upside. Tesla is really, really, really dependent on what's going to happen with this level based off of like the weekly chart, in my opinion. I think this one should be pretty much an outperformer, and this could just be absorbing everything off of like the previous resistance on the weekly chart from 385 all the way up to 414. So I could see that one just digesting properly for a little bit of time, weeding out a lot of the call buyers that are chasing into that highs, chasing into front running the breakout, and then that would obviously lead me to believe that this eventually reclaims the range and soaks the entirety of the range and maybe goes towards those 500s. But then we go take a look at some of these other charts and they just look terrible, right? We had a big time markdown. We talked about Apple on the other day, how we said this is a distribution and it's a completed one with the LPSY and then the actual phase D being a little bit more cut short, right? With the LPSY being a daily retest off of where the preliminary level of distribution was actually happening from. Could that be a completed distribution? Technically, it could. However, could this also be a weekly LPSY? And could we actually get a much bigger a distribution schematic where this actually fails on its earnings report, starts looking like it has a wick rejection off of 237.23, and then we could actually start heading for this level all the way down here. Could that also be the case? 150%. So a lot of these reports are very critical as to where the market's going to go moving forward. We'll go take a look at the individual tickers list real quick, just because I wanted to just go over the overall mega cap side of things. I really want to see a markup with INTC. I don't know if it's going to happen. If it does, I know this is accumulation. If it doesn't, going to have to wait and see what goes on for the future. We'll talk about PLTR. However, this is just a very, 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 whenever I talk about a potential distribution taking place, I don't have, I said I can't wait to short PLTR. That doesn't mean I'm shorting it today. That doesn't, this is a distribution that I think it was showing us the preliminary signs over here. December 9th, right? And then we made a new high, and that new high technically stalled throughout the holiday session. And then we got another pretty aggressive sell. And now we might be going for a new high once again, right? And if we could get some parabolic short model where this gets a little bit of extensions above us, and then we start getting some breakaway gaps, and then maybe we get a news candle, or into the report we get a major footprint candle or a nasty bear pig, that would be a confirmed distribution for me as well, right? So a lot of the focus right now, as of right now, is awaiting on earnings reports just to confirm on what's happening and who has the stronger hand on the chart moving forward. And that's why a lot of traders sometimes fail very miserably in some of these windows, is because, guys, no matter what you do and no matter how much analysis and time you put into the charts right now, you're not going to be able to have an edge on truly who has the stronger hand until you can wait for that report and just see where the volume goes towards, right? So with that being said, that's PLTR. I think this is an awaiting distribution for us to take advantage of for the future. Obviously, the report is something that's very, very big for it. With a big time bull peg, I would obviously wait for maybe some extensions from that bull peg, and then obviously that would result in me taking some sort of like reversion backwards into the actual bull peg if it were to if it were to be left behind, and just get these like slow grind up moves higher that revert back to the gap. It's kind of like something similar to like the XLF structure whenever we had this big time gap and I was bearish on banks all the way up here for a pull all the way down to the bottom of the gap. That's one of those like short models that I really study and that I talk about a lot. And that could be a fantastic opportunity to take advantage of those as well. So speaking of XLF, we'll talk about this one as well. So I don't think that this is necessarily going to be a broader market correction. However, do I think XLF now is extended from the upside? I do. I might be whipping out a short on this one soon. Joe Stonks might be back to shorting banks. So we just actually swept the high. We got really ugly action today, like extremely ugly. Like I can't even look at this shit without almost wanting to puke. And it really, really, really has me wondering what's going on here with banks. That is the ugliest intraday action and the ugliest, most inconsistent volume I've ever seen in my fucking life on a large cap. That looks like Lizzo. Like imagine Lizzo. That's Lizzo. That is Lizzo price action is what I call that. When we go take a look at some of the equity within the financial sector, a lot of this is really, really, really speculative as of right now. Like it's super speculative. Like I was bearish on banks whenever this one had the failure of a breakout above. And then essentially what it did was everyone was looking at this to be some sort of pennant. No, what that was they were distributing the less liquid equities before they could distribute, obviously, tech leading into the FOMC. FOMC being December 18th, right? And then that was the distribution that we've had with a really nice signal over here on BLK. We got the OPEX support bounce, and then from that range, we got the lower highs and then a recorrection lower. That recorrection lower just being into a massive fat retest right off of 960. So can some of these names continue their distributions, and could these be preliminary signals from the upper ends of the charts? Technically, yes. So whenever we, extend back to the upside and then we start failing those highs, that could be a short later on. And I'm not saying BLK is going to be like my main gauge in terms of where that thing's going to move, but we go take a look at some of these other names. They're huge, huge, huge extensions to the upside, like really gross extensions to the upside, right? We did just get a 50 MA bounce, so it's not as extended as actual price action looks because we only have I would probably consider this to be like 3 or 4 ATR probably 3 ATR extensions above the 50. I'll have to check a indicator that's on my laptop, and I can't really like see that just based off of like through my eyeballs. I'll also have to ask my buddy for a confluence on this one, Bracco, because I don't really trade his system, but like we talk every day about like we just play games together, and then we also talk about like the market a lot when we play, and he trades a lot of like extensions from like the 50-day and like ATR extensions, and he uses like Bollinger Bands and whatnot, and I'm gonna ask him about these financials, and I personally think they're extended. Could I be wrong? I totally could, but if this continues its extension above this high and it looks as to be effortless grinds higher to the upside, it's going to eventually end up like Apple. You know how everyone thought, oh my God, Apple to Apple to 270 because there was no sellers anywhere. Well, buddy, there's no sellers anywhere because Vanna and Charm were its strongest throughout this range. And then eventually what happens is once you get that parabolic top, everything is just a walk in the park back to the downside because sellers weren't really participating anywhere throughout this range. So that's the dur mentality. Don't have the dur mentality. Don't even long banks. It's just dumb. So with that being said, a lot of these ideas are speculative. So we're going to go take a look at the ticker list. I'm sorry, I got out of hand there, but sometimes I have to be a little stern, if that makes sense. Yeah, no, that looks horrific. Oh, Qualcomm. Thank you, Gage. This is why I love having a nice little Discord community because this chart is just beautiful as fuck, right? So you go take a look at like XLF at the top of the trend. That's Lizzo, right? And then you go take a look at something like this. This is like Kendall Jenner, right? So there's always going to be a Kendall Jenner chart. There's always going to be a Lizzo chart. You always want to kind of stick at a B minus or higher, right? This to me is like it's about a B plus. I would say it's a B plus. It's not the cleanest of the cleanest. We got an undercut recently of the August 5th low, right? And then what that led to was a control of equilibrium, right? When I talk about rectangular range accumulations happening, this is actually a Wyckoff concept. We'll take swing low, swing high, and we start looking at equilibrium. And the confluence here was beautiful in terms of this being a support, turned into a resistance. What they were doing was just eliminating supply off that area, and the bottom and the low, most importantly, being a spring. Beneath the external for the time being here on August 5th. So this is a fantastic looking chart. Where are the EMAs? The 9 is actually caught up to price action off of the Monday wick. So if we can actually trickle a little bit down in correlation with the NVIDIA sell in after hours, that would bring us towards the bottom areas of that Monday wick, maybe. I'm not saying it's going to. Actually, it's not really sold. I mean, what we have to see, it's too illiquid in the after hours. So, yeah, thank you for that, Gage. I believe that's on my list already over here. Oh, no, it's not. I took it off. Well, thank you, Gage. I appreciate that, buddy. So I'm going to add QCOM to that because I think that's a chart that can be a little bit more standout moving forward. We'll go take a look at a couple other names here within my stocks to trade. This is just more of my favorite stocks to trade. It's not any special list. We'll talk about some of these other charts, and then I'm gonna get going on with the recap. This is a long call tonight in the Discord, by the way. I'll be back real quick because I got to grab a water for how much I'm yapping. I am back, fellas. I'm sorry for that horrendous wait that you just dealt with there. I'm very, very sorry, man. You got to get going. Dinner is coming out of the oven. I'm Lizzo hungry right now, and my lady is staring at me. Always been a pleasure. I'll see you, Gage. I will see you, buddy. Nice work as of lately as well. Funny enough, remember we talked about how HD could be a really disgusting leader on the cell with no bid. As you guys can see, I love to yap from time to time. And we were yapping about HD right over here. I wouldn't be surprised to see HD being a leader of the cell today. They should start selling really hard off of that range, right? And as we can see, that was a really, I'll actually reply in the general chat if you guys want to go take a look. That's a really gross sell on HD. So with that being said, I could open a short on this. And the reasoning as to why Lucas was talking about that, boys, it's kind of similar to NVIDIA. You guys see what I'm talking about? I'm shorting this soon. So anyways, HD is going to go on here as a short side watch. To me, what this looks to be is a breakout failure over the old highs, and it's going to pull back into the bull gaps on the daily. I really, really like this chart. So I'm going to keep an eye on that one. If tech is strong, I'm going to keep an eye on CRM. And it's basically just going to be through here on that gap. Or at the bottom of the earnings candle on a reclaim. Look at that weekly. Insane. I'll be back. Hold on. Okay, so that's going to wrap up the scan. I really like China, but I think it needs a little bit more rest. Target 1 got hit on Baidu today. We go over into some of the other China names. We have some earnings. Yeah, no problem, Jed. I'll see you, buddy. So HD short side, QCOM long side, IBM, that was just an earnings. Starbucks, I need a high tight flag and a lot of digestion from that move, well over the ATR. Obviously, that setup is invalidated with just a slow grind higher and a gap up, all the way back up into the bear gap. That makes the risk to reward terrible. China needs some rest. I need to see what happens off of equilibrium with XLE, and then if it could get back above this area at 90. And then we go over into some of these other charts, and they're awaiting on their earnings. We'll take a look at the list just one more time and flip through here. AB&B is just the last one that I kind of like here, but it trades really badly. And when it trades really badly, I'm not a fan. When something trades badly, it's like, why am I even looking at this? I'm just gonna cancel that off of there. Everything else is relatively dry. The only other focus of mine would be something like a speculative ARM idea, which, nah, I can't even talk about that one. Oh, that's a healthcare name. I'll take a look at that. Oh, we have earnings. Gotta wait on the earnings, brother. Unless you want to take a bet into the earnings, I don't think that's ever been a good idea, but yeah, I think these are really nice short side trades on like Lowe's, and like Home Depot might be better. So yeah, I mean, we have the best looking charts on our watch list. Roblox is on a fucking monstrous run. Oh, the last chart I'm gonna talk about is XYZ. I like this chart just because it's on the SOS on the weekly. If this chart can remain strong throughout this general area, we have earnings that extend all the way into February 18th, and that could be a fantastic opportunity. So we'll see what happens with XYZ. That's SQ. And then healthcare, I'm going to add mRNA and J&J to the watch list. And then I'll see what happens with the ABBV report. And everything else is pretty stale. Snow's really nice. Not really nice. It kind of sent on its own. We still have a bear gap all the way up here, though. I don't know. We'll see. But yeah, that's going to wrap up for today. If you guys have any questions, feel free to ask. And now I'm going to start the recap, but I have something to do real quick. So I'll be back in probably about 10